Good morning and welcome to Car Dealer Live. I'm James Baggett, I'm the founder of Car Dealer Magazine, and today we're talking to Robert Forrester, Chief Executive of Vertu Motors on his interim results day. Good morning, Robert.
Morning, James.
Good morning. Good to see you. Thanks ever so much for joining us today. So just a quick rundown of some of the stuff you announced this morning. A £4.7 million profit for the first 6 months of the year. You managed to achieve revenues of 1.12 billion despite being closed for 10 weeks. An amazing turnaround from a lockdown loss of 14.3 million to a second quarter profit of 19 million. You must be incredibly pleased with those results, Robert.
Well, I think in context, I don't think we can suddenly claim to be God's gift to motor retail. I actually think motor retail has had a really good time post-lockdown. I think for a variety of reasons, the industry has found itself in a bit of a sweet spot. That said, and we talked pretty constantly, didn't we, throughout the lockdown and the post-lockdown, we probably came out stronger. We kept our marketing going during the lockdown. We kept 98 service departments going. We had all our general managers in throughout the lockdown, which I think gave us a platform to sort of accelerate off and do good things when we came out. And I'm pleased. I think we've done good things. So, yeah, I am pleased. It'll be interesting to see how the results of our competitors do. But, I mean, if we look at what we've done, we're pleased with it. Though I think we had some massive tailwinds. And it's nice for our industry to have tailwinds, so I think we've got to maximise when we can.
It's certainly nice to see a positive story. Just before you go on, Robert, I think if you could move your mic up a little bit, it might be a little bit better volume.
Okay.
That's perfect for those watching. So, I mean, would you have thought of a turnaround like this in March? I mean, at the depths of the lockdown, closed for 10 weeks. I mean, is this better than all expectations?
Oh, I mean, I had a forecast we did sort of last week of March, early April, that would have depressed anybody. It was absolutely gruesome, but of course it didn't have the full impact of government support, which is substantial in these numbers. Let's not forget, these numbers are heavily supported by the job retention programme, by the rates relief that the sector's been given. And we were making some fairly pessimistic assumptions about where the consumer would be at the end of it all. And that's the bit clearly we got very wrong in that forecast. I think it was quite clear as people progressed their thinking. The main thing is actually, yes, volumes have been there. And actually September was really, really good for volumes, actually. But volumes have been good. We've been increasing in like-for-like sales in all sectors apart from fleet car. The big difference is margin. And people have postulated for many, many a long year that what would happen if there wasn't the push, the new car push, which then feeds into nearly new pressure. So the answer is our margins go up and we make a lot more. The sector is a lot more profitable.
Robert, where are these buyers coming from? I mean, I've seen a couple of things, and I know we've chatted about it ourselves together before. But it's not pent up demand, is it? I mean, surely now this is people that are staying home, who have got more money in their bank accounts, and are actually going out and treating themselves to a car. And surely, if that is the case, that's going to continue.
Well, nothing continues forever. I've learnt. When there's an up, there's normally a down. When there's a down, there's normally followed by an up, and I think you have to just accept that that's the case. But I think we are seeing an issue whereby people saved during the lockdown. In the main, most people saved, couldn't spend money on holidays, couldn't spend money going out too much, and actually if they did go out, government paid half, and I've really got little choice as to what to spend money on. And I think, I've said it before, but you either do home improvements or you buy a car or you do both. And there were a lot more people in the country in August because no one went on holiday, probably 5 million more than normal, and that's a sweet spot for us. At the same time, the Prime Minister telling everybody to not use public transport and use a car. I mean, you couldn't really get a better set of circumstances, really. and then you've got the crunch on new car supply. New car supply is progressively tightened as the production shortfalls fed through, and that enhances margin in new and used cars.
I suppose what you're describing there is the incentives that the industry needed for car buyers to go out there. I mean, the government didn't need to step in, but by putting in those measures, they haven't, but in effect, incentivized.
Oh no, it's been a massive insertion of government financial support into the system. Massive. I mean, if we hadn't had where would we be if we hadn't had the furlough monies? As a society, never mind a business, where would consumer demand be? I mean, we're in a completely different place. It would have been untenable. Now, that's not to say that when the economic reality dawns of the end of furlough, prospective unemployment, etc., that the market doesn't get tough. And then you've got the Brexit conundrum, which we'll know within a few months, I guess. But we've got the Brexit conundrum there. So the SMMT and the manufacturers are clearly concerned going forward in terms of outlook for new cars with all those things, and wouldn't rule out, I think, pressing the government for government intervention. At the moment, there's a dearth of supply of new cars. It's tight. But who's to say that in 6 months' time that there isn't a need for more government intervention on that, as perceived by the manufacturers and potentially the retailers. But at the moment, it's slightly difficult to argue when Vertu Motors PLC has just made more money in September than it's ever made before.
Well, and that's the case, isn't it? I mean, your results are in stark contrast to the message that came out from the SMMT on Monday that it's all woe, doom and gloom, and that the picture for the industry is not good. I mean, do you think?
Well, it depends. I mean, they're not wrong from their perspective, of course. We are talking about two different things. Manufacturers are interested in getting their factories up and running and moving volume through the system, and top level volume is down. But what it doesn't translate, then that's fine as a message. But if you're a shareholder of Vertu Motors PLC, it is a very, very different message than we're giving. In September, our new car retail volumes are up 6.9%. Our Motability like-for-like volumes are up 11%. Our van volumes were up 53.3%. So overall macro manufacturing into channels is actually a very different scenario necessarily than dealer profitability. And having said that, the fleet car market is clearly struggling a bit. And we were down, we've been down 20% for months. And, you know, daily rentals always been a big part of that market for obvious reasons. You don't need a PhD to work out why daily rentals not firing all cylinders. Company contract hire is weak because a lot of people are sat at home not using a company car. Where do they go with company cars? And I think people are sat on their hands probably a little bit. And in a supply constrained new car environment, you would think manufacturers would shift volume into the segments where they make more money, i.e. retail rather than fleet. So I think there's some good reasons to explain why fleet is soft. Vans is definitely not soft. You know, vans is, again, for obvious reasons. Couriers. I mean, everything gets delivered to my house now. My wife doesn't go anywhere for shopping. She even gets daily Morrison's delivery now via Deliveroo. You know, we don't even do a weekly shop. It transpires in my house. It just arrives. So everyone is needing vans, and there's a shortage of vans.
What about these concerns, Robert, about second lockdown? Looking at the headlines this morning, there's leaders in the northeast saying that they don't think the lockdown that's currently in place is working. You've got a lot of dealerships in Scotland too that's having issues. Are you concerned about how these restrictions might tighten up?
Well, I mean, we have had COVID cases, limited numbers across the group. In not everywhere, actually, not every dealership. We did actually temporarily close the sales operation about 3 weeks ago for a few days. We've had a number of our competitors have had exactly the same. That we're really not talking about a lockdown. You know, I don't class a lockdown as closing pubs. It's desperately bad news for pubs, probably desperately bad news for society. But it's not a lockdown. We are not being told to sit in our house for 8.5 weeks and not move. So I think we have to use our terminology correctly. There was always going to be an upsurge as soon as the weather got cold because that's that's what the virus is, related to, isn't it? As everybody knows, flu takes off this time of year, and this virus will take off this time of year. We've been lucky. I was with some people yesterday who just come back from COVID. Most people had felt 0 symptoms. One person had felt quite poorly, but they're all back now. So I am not particularly worried. Largely on the basis, I don't think the government can afford it to take drastic action. And I'm in North Tyneside. Newcastle is one of the hotspots, probably because 80,000 students have just decided to land, and I've been going out. And to be honest, they're students, and it's Freshers' Week, and what on earth were we expecting them to do? And is it right to tell them not to go out? Put it into context: the 3 students died in Newcastle at the weekend from taking some dangerous drugs. Bad batch of drugs killed more students, frankly, in Newcastle than probably will be killed by COVID in the next 6 months. So I think we've got to try and get some perspective back, and I think there's been a lack of perspective and continues to be so, if you want my honest opinion.
Do you think the motor trade and specifically yourselves are well set up to cope with any of more stringent restrictions that do come in?
It depends on the degree. I actually don't think the retail business is likely to be affected by stringent thing. I could be wrong, of course. I don't think we will see a wholesale lockdown. You might get a dealership closed if it has a plethora of COVID positive cases, and public health might take some action there, but I think that will be very localized. But who knows? I mean, I wouldn't have predicted a lockdown in March. I would be concerned about the economy, and we've set our business up as best as possible. We've tried to make it more productive. We have used technology to make our sales process as effective online and at home as it is in the dealership. We're in a much better position with that than we were going in. Our cost base is lower. I think people are really working very hard within the business and are bought into what we're trying to do. We supported people massively during the lockdown in terms of paying 80% of average earnings. So I think people have come back to work highly energized, knowing that I think the company did the right thing. We communicated with them significantly during that period to make sure everybody understood what was going on. And I think people are anxious. So, well, actually, quite a lot of people are anxious. Quite a lot of people are fed up with the whole thing and would just like to move on, actually. There's a real split, isn't there? But we've got to be there for the people who are anxious, both within colleagues and customers, to say, right, we are wearing masks in the showrooms. We are taking temperature tests. We are about to produce some more customer-facing videos, which we will utilize to make the anxious 50% of the population less anxious about coming into a dealership. There is a real, the media have done a phenomenal job in scaring people witless.
I do hope it's not as bad as you say, the media are portrayed. Just a couple of specific questions on the results, Robert. One of them that just struck me was the net cash position. We saw in Pendragon's results last week, the 31 million of theirs was a VAT deferral. Is part of that net cash you're holding?
No, I mean we've paid all our taxes, rents, suppliers, all up to date. But in quarter 2, we had a massive amount of sales, no purchases, and therefore a big VAT payable, which we paid in September. That's just normal. Well, it's not normal by any stretch of the imagination, but it's the normal way that we pay VAT. And I think the sector will have seen that, I suspect.
And the other one that I had a query on was the share-based payments and goodwill taken out of the profit number. I mean, was there a reason for that?
No, that's always been the case. The analysts have always classified share-based payments as non-underlying. Just how it's been, really.
And the one that I know the most trade is very interested in at the moment is this Kazoo valuation of £2.45 billion worth of investment. You're looking at a business that's got a huge number of retailers that's generating very impressive sales. Does a £2 billion valuation of an online company annoy you?
It doesn't annoy me. I think it's a brilliant thing, actually. And the first thing to say is that company is not an online retailer. It is very much a bricks and mortars retailer now. I think we sell considerably more used cars than them, and I'm interested as a capitalist in generating sustainable cash flows. and there are a lot of these online models that do not, even in the medium term, generate sustainable cash flow. So we'll stick with what we do, and we wish them well.
Why are they worth so much more than you then, Robert?
Because they've got shareholders who ascribe that value to it, because there is this phenomenon of unicorns and generating value in the short term from shareholder raises. Whether it generates it in the long term, we'll have to see. I've got my model of how capitalism works, and they've clearly got a different one.
And one of the things that I mentioned is, again, continued consolidation. You've been recently acquisitive again with the Kia purchase from Sandycliff. Is there any other manufacturers you'd like representation of? I know, specifically Volvo or BMW not in your portfolio.
Well, we obviously, we're a sizable group, and we maintain good relationships with the manufacturers that we haven't got dealerships with, because it would be stupid not to. And in the fullness of time, we would hope to be able to represent different manufacturers. But at the end of the day, it is for those manufacturers to determine their franchising strategy and to allow people in. We'll put our cards on the table with them and say, this is what we can do. Does it fit? And we'll see where we go. So
anybody on the radar? Any of those on the radar?
Everything's on the radar.
And finally, Robert, I knew I wouldn't get that one out of you. Finally, the rest of the year, we were talking before September that September looked like a record month. It looked like it tailed off a little bit. What are your thoughts for the rest of the year?
I think we'll just have to take each week and month as it comes. I think we've got some good visibility on October. I'm confident we can deliver a result in October. We've got a great marketing plan. We've got a lot of new cars carried over from September, so I'm comfortable with that. November is always horrific. November is always, it seems to get worse every year, actually. I don't know why, but it does. I think we've got some visibility out to our year end in February. I wouldn't say it was without risk, obviously, but I think there's more visibility now, and we thought there'd be more visibility. The analysts have now come up with numbers, which is the first time this year they've had numbers. So we've got it to do. It's not in the bag, but having a strong September certainly helps the second half.
Are you actually managing to plan at all, Robert, at the moment, or is it just?
Oh yeah, no, we're absolutely.
It must be tough though.
No, not really. I'm ignoring this year. My business plan I've done my business plan for next year. I know I've done the targets by dealership. I'm ignoring this year. We will compare next year to our previous financial year and just write this off as a strangeness.
Well, impressive stuff. Robert, thanks ever so much for joining me.
Okay, brilliant. Thank you.
Super. So really good to hear from Robert there. If you'd like more videos like this one, log on to cardealermagazine.co.uk and click on the live tab at the top of the page. I'll see you next time. Thanks ever so much. Goodbye.